Alright guys, welcome to another week ahead video. This week's video will cover the trading week running from the 19th to the 23rd of April 2021, and our focus in this upcoming week will be the BOC's policy and rate decision. Now, from the start of the year, the CAD has been one of the best performing currencies among a wide range of both developed as well as EM currencies, but in the last month the CAD has really struggled and hasn't really been performing in line with its fundamental realities. If we consider the illustration that we can see here, we can see that among a basket of major and EM currencies, the CAD was the third worst performer versus the US dollar, and the dollar has been weak over the last 2 weeks. Now, are there any reasons why the CAD would have been underperforming over the past few weeks versus its major peers? Not a lot of reasons on multiple fronts, whether it's from monetary policy to intermarket price action to risk sentiment and even just the economic data. The picture for the CAD has improved markedly recently. Taking a look at the recent economic data we've seen out of Canada, it's been one of the biggest positive surprises and positive influences, or should have been, for the CAD. Growth data has been solid. Q4 as well as January GDP numbers surprising to the upside, and according to RBC, the current Q1 growth is tracking close to 6% annualized, and that is miles ahead right now of the BOC's assumption of just 2.5% back in January. If we take a look at the employment situation, the employment data is looking very perky as well, with a sizable beat in employment data last week or 2 weeks back, printing at 303,000, well over the expectations, and the business outlook survey also pointing to possible further gains to come. Oil prices is another positive from an intermarket point of view. According to the OEC, crude petroleum is roughly 15.7 or roughly 16% of Canada's total exports, and that means that the Canadian dollar is usually very sensitive to changes in oil prices, as it can heavily affect their exports and the economy. Now, after moving very range bound from the middle of March to the middle of April, we finally saw WTI moving back in line with its medium-term upside bias this week, breaking back above key resistance between $61.50 and $62 per barrel after another solid EIA crude inventory draw that we had this week. Now, apart from oil, the recent fiscal spending spree that we've seen in the US with another stimulus bill and more spending planned in terms of infrastructure, that is also expected to benefit both the Canadian as well as the Mexican economies, with over 70% of Canada's exports sent just across the border to the United States. Now, what about monetary policy? From the start of the year, the Bank of Canada has really been one of the least dovish central banks among its major peers. Their less dovish tone, combined with the recent solid economic data, has seen market participants speculating from early 2021 that the bank will look to possibly taper their QE program as soon as the second quarter of this year. Now, on the 23rd of March, this expectation was all but confirmed as Deputy Governor Gravel announced that the bank is discontinuing their market functioning programs that included commercial paper purchases, provincial bond purchases, as well as corporate bond purchases, and that they basically introduced during the COVID-19 crisis last year. Now, that discontinuation of those programs saw majority of market participants solidifying their expectations that the bank will look to start tapering their QE purchases of government bonds as well. Now, apart from monetary policy, taking a look at positioning, recent data and reporting from ING suggests that the Canadian dollar is very close to neutral positioning right now, which basically negates any type of unwinding theories despite a solid run that we've seen from the currency from the start of the year. So why isn't the Canadian dollar higher then, given all of these positive factors? Well, that brings us to the week ahead. Now, up until last week, the expectations for the Bank of Canada to taper their asset purchase program in this week's upcoming meeting was really set in stone, so to speak. With all the other positives we already mentioned, there has been something that did change recently in the short term that has affected the CAD in this last trading week. And the biggest threat to the Bank of Canada's tapering program right now is arguably the virus situation. Virus cases has been rising, and doing so with some worrying steep rates recently. Comparing new cases in Canada to that of the UK, who have been just exceptional in keeping the virus at bay. If we compare that to the UK as well as the EU, where virus rising cases has been a point of concern for quite some time, it's easy to understand that the current challenge that Canada is facing with the virus, why that would be a concern, and why some provinces like Ontario has moved forward with locking down again. Now, the rising cases has been enough for some participants like UBS to actually push back their tapering expectations for the Bank of Canada for that June meeting, or towards the June meeting rather. And in recent notes, they did explain that the BOC's tapering will be largely, in their view, largely dependent on where the virus cases move lower, despite all of the other positives that we've already mentioned. Now, there is a light at the end of the tunnel, so to speak, in terms of the virus situation, because Canada has recently been ramping up their vaccinations, and they have overtaken the EU right now in the past couple of days. And if they can keep up this current pace, the risk of further restrictions down the road or going forward does look unlikely, and would be the last negative out of the way, so to speak, for further tapering to continue, as long, of course, as oil prices continue grinding higher, and as long as the economic outlook remains favorable as it is right now. So where does that leave the Bank of Canada in this upcoming policy decision? Well, preceding the virus escalation, the baseline expectation among participants was for the bank to announce that they are officially starting to taper their government QE program, the government bond QE program, at this meeting by reducing the current purchases of 4 billion per week to 3 billion Canadian dollars per week. Now, even though majority of participants do still expect the bank to follow through and announce that 1 billion reduction in QE, the virus situation is giving some participants, like we mentioned, like UBS, some cold feet on this idea, and they explain that the rising cases and new restrictions has put the BOC in a very tight spot right now, because on the one end, we have their recent hawkish policy actions by discontinuing those functioning programs. We have their more hawkish commentary. And of course, we have the economy that has massively outperformed than what they were expecting it to. So that is the positive end. On the other end, they have the resurgence of the virus with renewed lockdown restrictions, which makes tapering seem a little bit premature right now, and also makes their incoming forecast at this meeting challenging, because they'll need to juggle between the positives and the negatives in terms of their forward-looking guidance. Now, the baseline still expects, like we said, the bank to deliver by reducing their QE program by 1 billion per week, but arguably the forward guidance in light of the virus developments will be very important in this meeting. A commitment to follow through with more tapering in the months ahead will be seen as an even more hawkish stance from the bank at this current juncture, considering the virus situation. So it's reasonable to expect that if the bank does follow through with tapering this week, that they make the path of tapering very reliant then on the trajectory of the virus, explaining that a worsening situation would see them pause tapering, while an improving situation will see them move forward at a pace of potentially 1 billion Canadian reduction at a time. Now, the excellent team at ING Investment Bank has also flagged another possible hiccup for the CAD in the week ahead, and that is in the form of President Biden's climate summit taking place on Thursday, and they reckon that any major announcements about potentially accelerating the new administration's green energy transition plan could also be a headwind for oil prices, and that can, of course, also affect the CAD negatively in the week ahead. So here's a potential breakdown for the bearish and potential bullish outcomes for the CAD this week, starting with the bearish outcomes. So the first one would be that climate summit pressuring oil prices, and that is to be expected to be a negative on the CAD, depending on how far that moves oil prices, of course. It will depend on what type of impact we're expecting it from the CAD. Apart from that, if we see downbeat projections, that will of course also see some downside in the Canadian dollar. If the virus pushes back more tapering from the BOC, that'll be seen as a very bearish outcome for the Canadian dollar. Also, if we don't see any tapering, remember that tapering, even if it's just by 1 billion, is a baseline expectation right now for the markets. Even though there has been some that's doubting that, it's still a baseline expectation. So if we don't see them follow through with that, that'll certainly be a negative or expected bearish outcome for the Canadian dollar. In terms of bullish outcomes, just the opposite. If we see oil prices staying firm despite that climate summit, that is expected to provide some support for the CAD. If we do see the bank follow through with tapering, it will be seen as a bullish outcome, but keep in mind it's going to be a lesser bullish outcome compared to a no tapering, because right now the markets are expecting them to follow through with that. So it will be seen as a positive with the virus situation, but it won't be seen as negative as not tapering this week. So just keep that in mind. The other possible bullish outcome is a upbeat projection despite the virus situation. That's expected to see upside on the CAD as well. And if we see them explaining that the virus situation doesn't really alter them or alter their forward-looking tapering plans, that'll be seen as the most bullish outcome, arguably, for the CAD in this week. Now, keep in mind that the possible bullish and bearish catalysts that we mentioned here, they're not necessarily dependent on each other, and they're not ranked in order of importance. Every one of these catalysts is a potential bullish or bearish catalyst in their own right, but if they are combined by other similar bearish and bullish catalysts, they are of course expected to have a bigger impact in asset prices. Also keep in mind that the markets can always surprise in the way that it reacts, so the expected impact is never intended as a trade call, so to speak, but rather intended as a guideline and a framework for you to use in your own scenario planning. So that is everything from our side for this week ahead video, guys. We hope you guys have a fantastic trading week ahead. And as always, if there's any questions, please don't hesitate to let us know.